most of you know I'm Brazilian, and I've been talking a lot with my friends and family there about after Brazil won the benefit to have the Olympic Games in 2016. And I think this is an appropriate story here to tell about the Chinese low prices and Brazilian people, how do they do business around the world. And so they have this big complex to be built, and they have the three final competitors getting to the meeting the government committee to approve who is going to build this $1 billion, this huge complex for the Olympic Games. And so the first one to present the quote was the Chinese. And the Chinese said, well, our price is $3 billion. And they said, wow, $3 billion, can you explain that? Give us a breakdown. I said, sure. It's $1 billion for raw material, $1 billion for labor, and $1 billion profit. I said, good. So they said, well, we want somebody from a different country, and so they choose an American. An American came with $6 billion to build the same project. And they said, can you explain that? I said, sure. It's $2 billion of raw material, $2 billion of labor, and $2 billion profit. I said, well, okay. So they have a final competitor, a Brazilian contractor, and they said, well, can you give us your quote? They said, yeah, $9 billion. $9 billion. Can you explain that? I said, sure. It's $3 billion for you, $3 billion for me, and $3 billion for the Chinese to build it.
It's time for Fully Threaded Radio.
It is Fully Threaded Radio, voice of the FCH Sourcing Network. This is Eric Dudas, and I'm joined, as always, with my partner. He's a gentleman, he's a scholar, he's Brian Musker. Brian, how are you?
I'm great today, thanks. Let's get the show on the road.
Excellent, let's do so. This is episode number 4, and we're recording the week of April 26th. This episode will be uploaded to the fullythreaded.com website on April 29th. That was Nilo Urbani of Nylok in the opening remarks of his speech at the NFDA Spring Conference meeting. And as you heard, he got quite a laugh there as he opened up his talk. We'll be talking a lot more about that on today's show and also on the next episode of Fully Threaded. We were very lucky to be invited out to the Spring Conference, the NFDA Spring Conference, Brian.
Yeah, that's right. We've dealt with many NFDA members, well, since we started, actually.
I'd like to start out by expressing our appreciation for the invitation and the chance to cover the NFDA conference, and just say thanks to Jim Deary, the incoming president of the NFDA, also Matt Ulrich, and the Smith-Buckland team headed up by John Housel. They did a great job at the conference. We reported during the last episode that activity on the site, and it seemed throughout the fastener industry, was really building, and the trend seems to be continuing. What do you think, Brian? What do you see out there in the search engine?
Well, we see a few interesting different types of searches coming through this week, and some of those were for sheet metal screws and some self-drilling screws, which is not, you don't see those that often. I mean, there's various other places people can get those on the web, actually all over the web. But we saw some large numbers of inventory requests come through, which is sort of surprising and very good.
The trend is certainly confirmed. Business is picking up, and at the same time, we're hearing so many companies that have downsized are really doing double duty that is going a little bit berserk out there right now.
Well, yeah, you're right. In our discussion last week with Madison, one of the really interesting comments was that the usage of people has changed a bit, mainly because of the reduced staffing. And it's created a number of problems really with how to reorganize things so that you can still actually get work done without making everyone crazy. And I think that's really, we've seen that and we've heard that from a number of other people as well.
Today's show is another great one. If you buy, sell, manufacture, or import fasteners, you are going to get something out of it. We're going to begin with a report on market conditions from Analyst Holden Lewis. He'll be reporting from the BB&T Capital Markets headquarters in Richmond, Virginia. Then we'll be playing a couple of the segments that we recorded at the NFDA Spring Conference. The first one from Geoff Hopwood, who's the president of the European Fastener Distributors Association. And then we'll hear from Steven Fang, who is with the Taiwan Fastener Trading Association. These are a couple of really, really informative presentations, and they're very well worth the time spent. I'll remind everyone that we're happy to receive your emails, your feedback. Please do send your emails off to ftr@fullythreaded.com. Also, check out the YouTube channel at www.youtube.com/fullythreaded. We're also available on iTunes, and more folks are reporting that they're downloading the show, listening to it on their iPhone or their iPod while they're driving along, making sales calls and so forth, and that's a great development.
Yeah. Just another little way that technology is creeping into the fastener industry, little bit by bit, despite most hopes, I guess.
Today's show is actually a little bit of a departure from the first several that we've produced. We're going to be playing some segments that are actually recordings of presentations rather than conversations that we've been having with folks, kind of distributor spotlight fashion. And it's been great to talk with people as we make our calls. And actually, it seems like people might be opening up a little bit. It's like you call them up and they want to talk a little bit more. It's I wonder if it's having an impact or if just my imagination, because I'm doing a lot more of it. I'm not sure. What do you think?
Well, I don't know. But I do know that I had a great talk with one of our new members, Dan Zender from Trinity Logistics. And we had a great discussion about the fastener industry and his long association with it while he was driving to a meeting. I look forward to them being another happy FCH member.
And speaking of talking with the world in general, you invited me the other day to join the Fastener group on LinkedIn. Now, we've been LinkedIn members, such as it is, for a long while, but we've never really been actively participating. And lo and behold, you invited me off to this group, and I got involved with it. And what are your impressions of this thing so far? What's going on out there?
Well, I've been involved in the LinkedIn for really a fair while, and I've used it to keep in touch with friends and business colleagues really all over the world. But it's a different sort of a thing to either Facebook or MySpace. It's much more of a business orientation rather than a personal orientation, and it requires a bit of work to take advantage of it properly, and it could be a good place to promote fully threaded radio, actually.
Well, there's a lot going on out here, and a lot of it is promotion. We were talking in the first episode of Fully Threaded to Andy Pells of ScrewCrew.com, the fastener marketing dude, and he was talking a lot about Twitter. He didn't really mention too much about LinkedIn, and so far I haven't actually seen him out here. He may be participating, and this is a relatively new group that I've joined. But for anybody who hasn't seen it yet, if you do participate in LinkedIn, there's a group called Fasteners Industry, and it was established in June of 2008. There's a little over 2,100 members, and it has 13 subgroups. So it's actually got the framework to support quite a bit, and I guess as time goes on, we'll find out what it's actually doing.
Yeah, no, I looked through it as well, and it seems it's worth having a bit of a careful look at.
I've noticed that there are several inquiries for hard-to-find parts, particularly parts with American certs. Perhaps there's a little bit of a crossover there with FastenersClearinghouse.com. Who knows?
Yeah, it's possible.
One thing about LinkedIn, though, is like the rest of the web and like a lot of the forums and so forth, you can really get lost and follow a lot of threads, various places. And one of the threads that I was reading, it took me off to a headline that really hits home, because when we were at the NFDA conference last week in San Antonio, of course, the volcano in Iceland had blown its top, and several of the European visitors were stranded. And on one of the headlines that I saw here off of the LinkedIn group, it turns out that the folks were on their way home.
Yeah. The reality is it's better to be safe. I mean, there's a number of pretty well documented cases of aeroplanes that flew in the vicinity of volcanoes that all their engines cut out. And it took a lot of nerves and expertise from the pilots to actually get the engines restarted as the planes sort of sank thousands of feet, mainly in the Pacific, that was. So, it's people can consider it's a bit of a problem to be held up, but it's better to be alive.
And I'm sure fully threaded listeners would agree.
Right.
Well, it's good to know that everybody's on their way home safe and sound. At least I hope they are.
Yeah.
If any fully threaded listeners are linked in also, let us know. Let us know what you're doing, how you're using the service, how do you like it, and we'll be advising on that one.
Right.
Let's move to our first segment with Holden Lewis and find out what's going on the business side of things. And then we'll come back and start with our NFDA segments.
Right. Okay.
Holden Lewis is an industry analyst focusing on manufacturing and industrial distribution. He joins us from Richmond, Virginia, from the BB&T Capital Markets headquarters. Holden, welcome back to Fully Threaded.
Thanks for having me again, Eric.
We reported at the beginning of the show that there are reports from distributors across the country suggesting that things are picking up. What can you tell us about the market conditions since our last visit?
Well, I think that your read is pretty accurate. In fact, we are in the midst of earnings season here, and I have to say that the sentiment is pretty universal at this point, that with the exception of some pretty rare spots in the economy, for the most part, things are getting quite a bit better. And like I said, that is the broad and wide-ranging sentiment from the host of companies that we have seen report so far this earnings season. We'll have more reports coming up, and I would expect very much of the same. In fact, March seems to have been a watershed month. I would venture to guess that had we reported earnings after February, people would still be throwing a little bit of caution around, but March seems to have been a month that everybody pretty universally says was a very, very good one, and has materially improved the sentiment up and down the supply chain within the industrial space. And I think that's really being borne out by a lot of the data, Eric, that we track. Industrial production for March, as I measure, was up about 1.5% sequentially. That's the 9th straight month that we've seen industrial production up on a sequential base. Durable goods in March were up about 3.7%. That's the 10th month out of the last 14 that we've seen durables up, and that's a very big number for a single month sequentially. And then, of course, the best leading indicator we have, the Purchasing Managers Index, that hit a very robust 59.6 in March. So seems to be only picking up momentum at this point.
Let's talk about employment conditions then. Headlines suggest a very small movement towards an improving situation in the U.S. environment overall right now, although this is widely believed to be a superficial trend. Can you zero in on the industrial sector for us and give us your impressions of what's going on out there right now related to employment, Holden?
Sure, and that's really something of a good news, bad news thing right here. The bad news is I'm not sure there's been a tremendous change in terms of overall unemployment rates. As we look at a lot of that data, it really hasn't moved a lot from the high levels that we were setting late last year. So we continue to hear companies saying that they need to add 10%, 20% more revenues before they have to start adding people. So we're not quite there yet, and so I don't think that there's been a lot of fresh employment in the manufacturing sector. However, with the improvements that we're seeing in the macro data, you are seeing people calling back furloughed workers. You're seeing hours begin to lengthen. You're seeing, two shifts a day back up, even some Saturday shifts that are back up. And the result is that we've actually seen earnings, employee earnings in March, up about 8% year over year. That's a very big number. Going back in our records, we don't have a number that big for many, many years. So you're seeing a very sharp rebound in the earnings of the employment base that's out there. And I would argue that with that number going up and with the macro data going in the trend that it is, unemployment, which is a classic lagging indicator, at some point that needs to begin to improve. So for those that have been unemployed in this nasty downturn, they may not be they may not be getting hired in droves here, but the environment is clearly moving in a direction that should be improving as we go forward here.
So there are some positive signs, but there's also concern out there about market fundamentals. Specifically, some reports are suggesting the weakening dollar is symptomatic of impending interest rate hikes, or there's even discussions out there about currency valuation in fairly ominous terms. I know you're not a macro guy. You don't concentrate on the macro side. I don't want to put you on the spot here, but what are you hearing about all this?
Well, it's true. I'm not a macro guy. I'm no better than a hack economist. But I will say that interest rate hikes are not a big concern to me at this point. In fact, frankly, in terms of what the dollar is doing, the dollar has been strengthening. But that could just be that could be just as much because of concerns over Greece and what that might mean for the Eurozone and the euro. So what exactly the recent strengthening of the dollar means in terms of the bigger picture, I think that chapter is yet to be written. But I'll say this. Clearly, for bigger companies, you're going to have some valuation headwinds. But for these bigger companies at the same time, valuation headwinds aside, most of them have manufacturing pretty well spread across the globe. And so they will be able to, they at least won't be in a more adverse competitive condition. The smaller companies, I would concede that it could make the export markets somewhat less competitive if you primarily operate out of the United States, and that will probably feed what we've seen, which is a dichotomy in the U.S. market, where big firms are feeling pretty good about what's going on in the macro environment, and the smaller firms are really lagging that significantly. And I think they're lagging that because export markets might get more challenged in a stronger dollar environment, and because getting credit is still relatively difficult. Now, you brought up the point about interest rate hikes. Whether the dollar is forecasting that now or not, I still think that everyone pretty much expects that the next major move in rates is going to have to be up. The debate really is more about timing, not direction. And it's one thing, again, I would say about that is, from a large industrial company perspective, it's never been a problem. To the extent that interest rates are rising because the economy is doing well, traditionally the strong economy and the leverage and absorption that comes with higher revenues in a stronger environment, that has historically easily outpaced any adverse effect from higher interest rates. So, I'll be honest, I'm not overly concerned with the direction that the dollar has moved at this point. I'm not overly concerned with the potential that interest rates have gone up, simply because in the past, those have not been cycle killers for the industrial space. But, I'll tell you, Eric, I do see the concern from a smaller company perspective. I think that to the extent that those two trends do fall into the market, and they either are or are going to, I think it does put more pressure on what is a more fragile psyche among the smaller manufacturer in North America than it does on the larger ones.
That's a good point, and I'd say that's a great way of characterizing it, a fragile psyche, indeed. Let's finish with a look at what we should be expecting, or watching at least, for the next several weeks. Got your eye on anything fully threaded listeners should be aware of?
Sure. I think at this point we need to start paying attention, not that we haven't been, to some of the consumer measures that are out there. The automotive demand, which has been a nice little prop for the manufacturing sector for the past 9 months or so. It looks like auto production is now starting to flatten out at nice levels, granted, but the ability to sort of grow the top line off of automotive unless consumer demand continues to accelerate or begins to reaccelerate, automotive we might have to sort of turn and say thank you and move on to what the next part of this rally could be. Housing is really sort of the same case. Not that that's been strong of late, but we have to see what's going to happen now that some of the sort of the tax incentives and stimulus is coming off the table. So, we do have to sort of be cognizant of ultimately the consumer driver to our economy and what's going to happen going forward as some of these things play through. I also think, what's going to happen with China. China has become a significant engine for growth for the global industrial landscape, certainly more so than it's ever been in the past. And, there are some questions about what's happening with their currency. Now, it doesn't look like their currency is going to get more difficult to deal with. If anything, it could get somewhat more positive to deal with. But nonetheless, that's something that we have to watch for. And we have to watch for China's efforts to slow down its economy. Going from 10% to 8% probably wouldn't make anyone shed a tear. But to the extent that they mismanage that, that's an important region of the world right now that's propping up demand from exporting nations such as ours and Europe. So I think watching those two bigger areas is something that is very important. In terms of indicators, to get sort of real-time data, the indicator that we always track is the Purchasing Managers Index, which comes out on the first day of every month. Again, the Purchasing Managers Index tends to lead the industrial production by 3 to 5 months. And so anything over 50 is a good thing. As I said, in March it was a 59.6. The way to read this thing is, look, if it goes to 59.6 to 56, there's nothing wrong with that. It still suggests that you're in a growing environment. But the PMI, that Purchasing Managers Index, that really is the best leading indicator that we track that tells you about what the environment's going to look like 3 to 5 months down the road. So again, that comes out the first day of every month. Certainly something to keep an eye on in terms of immediate trends. And then those consumer and Chinese trends are something which I think have more secular bearing.
You really hit the ball right on the label on that one. The rest of this episode today is going to concentrate on some of the international issues, including a focus on China and what is expected in that environment in the near term, the next 3 years, let's say. So right on the money there, Holden. Appreciate your perspectives, and we look forward to speaking with you again very soon. Thanks for joining us, Holden Lewis of BB&T Capital Markets.
Thank you again, Eric.
Fully Threaded, Geoff Hopwood and Steven Fang coming up next.
FastenersClearinghouse.com. Search and source from over 500,000 line items, or just a mouse click away, and available at no charge. When the need arises, you won't find a better place to locate hard-to-find fastener inventory. It's where you need to be.
This is Joe Truckee of Cal Fasteners, and Fasteners Clearinghouse works for us.
This is Robert Wanzer, and Fasteners Clearinghouse works for American Imperial.
This is Andy Pell from ScrewCrew.com, and FCH works for the fastener industry.
Join the sourcing network now and show your inventory to a whole new market. Turn slow movers into cash. List up to 10,000 line items. Show them to distributors only or to the world. FastenersClearinghouse.com. It's where you need to be.
This is Matt Allert with the Summo Products in Des Moines, Iowa, and you're listening to Fully Threaded Radio.
NFDA Spring Conference took place April 14th through the 16th in San Antonio, and the theme was undoubtedly globalization. The stated direction of the NFDA is internationalization and globalization, and Jim Deary, the incoming president of the NFDA, will be joining us for the next episode of Fully Threaded Radio. And we really look forward to that and hearing more about some of the things that are going on and the strategic plan that he and the board are implementing. But I'd like to take a moment to briefly set up the two segments that we're going to play on today's episode, because you don't receive this type of information just anywhere, and I think that we were really privileged to be able to participate in the NFDA meeting. I also want to point out that the presenters were using slides. Now, they both did a very good job of drawing conclusions, and I think the presentations as presented here are very listenable. Don't get turned off at the beginning when you hear them reading off the slides a little bit, because I think they're setting up their discussions very well, and they go on to draw some very, very good conclusions. It's well worth a listen. If you're an NFDA member, you can access the slide presentations from the whole conference, as I understand it, from the Smith-Buckland folks, and you can get these on the NFDA website, which is www.nfda-fastener.org. The first presenter is Geoff Hopwood. His presentation lasts, as presented here, about 22 and a half minutes. He was discussing briefly the EFDA, the European Fastener Distributor Association, and he goes into the key issues facing European fastener distributors, but also, and probably most interestingly, he presents the European perspective on fair trade and anti-dumping. The second presenter is Steven Fang, and he was representing the Taiwan Fastener Trading Association, the TFTA. That organization is comprised of about 200 companies, and those companies account for about 50% of Taiwan's total annual exports. So this is a substantial organization. Steven's presentation runs about 13 and a half minutes, and he covers the historical development and current position of Taiwan versus China in the global fastener market, and also Taiwan's views on the impact of China's trade disputes in the global fastener market. He goes on to present Taiwan's perspective, or their view on what's going to happen in China in the next few years and how they're positioning themselves. Now, this is really eye-opening, folks. This is good stuff, so I hope you will listen. But let's get started now with Geoff Hopwood of the EFDA.
Good morning, everyone. Wendy, ladies and gentlemen, fastener colleagues, this is my first visit to NFDA. I haven't been around quite as much as Mark has. And on behalf of myself and Bernd Stapp, I would like to thank you for both the invitation and your very warm welcome. I know a little about NFDA thanks to Mark's visits to TFTA and to our conference last year. Thank you again for speaking at that, Mark. I took over as president from Bernard Barang, who has addressed, along with Bernd Stapp, for your meetings in the past, I think 2006 and 2007, and told you a great deal about Europe, so I'll keep that bit pretty brief. However, a lot has changed since 2007 in the fastener business, and I think in the world as a whole. And that's part of what we will try and get to grips with. First of all, though, I have been in the fastener business for only a few years. I'm not a long-time fastener industry man, as I know many of you are. But the business that I run has been around for over 100 years. Howlett Jayton is the name of the business. It's the main business in a group of fastener businesses. Our owners are a private US family who have lots of other distribution business interests. Howlett Jayton is a leading master distributor of fasteners, the leading one in the UK. It's based near Birmingham, which I'm sure many of you will know. Birmingham was the heart of UK fastener production, and I think pretty much of the world fastener industry, if you go back to the 19th and quite a lot of the 20th century, but that's sadly no longer the case, and there is little or no production of fasteners in the UK today. I intend to talk about three areas today. EFTA initially, which I'll be brief on because there has been presentation on that before. Second, some of the key issues that are facing distributors today, certainly as far as we see those issues in Europe. And thirdly, the hot topic of fair trade and anti-dumping. Firstly, EFTA. EFTA is a grouping of national fastener distributor associations in Europe, and it includes the major countries. There are no individual company members within EFTA. It covers the majority of the European fastener distribution. We don't have in those countries too many competing organizations, so they tend to be the major representations in the country. We don't have your geographical regional problems that you have here in the US. It does not include producers. It is only distributors. Producers have a separate association, which is EFI. EFTA's mission, you can read it, but basically it is to provide a forum where we can meet, discuss, and coordinate action. EFTA represents the leading fastener distribution businesses in Europe with around 4 billion sales. That's what we said last year, and I suspect it's a little bit less than that for 2009. But that's the indication of the sort of market business through the membership. Over half of the market in Europe is supplied through distribution rather than direct from producers. Most of that goes to OEMs. Germany, France, and the UK represent more than half of the UK market, so whilst there are 27 countries there, you don't need to worry about, to the same extent, about the other 24. Those three countries certainly represent the majority of it. And in terms of customer sectors, I think you'd find a very similar sort of split of customer sector as you would have in the US. So what are the main factors driving issues now? Well, again, Brian did a superb job, and I'm earlier on yesterday, and I'm not going to start getting into the economic side in any detail. You'll recognize most of those. But behind that, you have the recent economic collapse, the shift from west to east in a global economic sense, growing imports, anti-dumping actions, greater international trade, increasing market segment focus, shorter supply chains, increasing competition, plenty to think about. And it's fair to say these trends impact on producers as well as on distributors. And we share some common concerns with distributors, and we also have conflicts of interest. At least in NFDA, you have within your own membership the opportunity to talk to each other. In Europe, it's not so easy. They are a separate organization, and we have from time to time had good relationships, but anti-dumping hasn't helped it recently, so we don't always sort of meet them on friendly terms. But EFTA, the Distributors Association, and EFI, the Manufacturers Association, should be working together in the customer's interests. Sometimes this does get lost because of mistrust and self-interest. Anti-dumping certainly hasn't helped. But there is a good deal to talk about. Communication, market, information, certainly product standards, commercial terms, legislation. Those are things that are common core issues for producers and for distributors. And there are things there that we need to get together and talk about. I don't think we should worry too much about the conflict of interest. Ultimately, the customer will decide whether he wants to deal, whether he's able to deal directly with an OEM, a producer, fastener producer directly, or a distributor. And frankly, for many, it is simply not practical for them to deal with producers. So I think the market will fall into its natural pattern. Moving on to the key issues for the future. Some figures for Europe. I don't propose to dwell on them, but these come from the European Commission. GDP down 4%, 09 on 08. Investment down 12% in the third quarter last year. Unemployment around 10% officially, but everybody knows that behind that is hidden a lot more partial unemployment. Inflation around 1%. A difficult framework. To offset the downturn, Europe has funded car early scrappage schemes like your bangers, whatever you called it. Yes, cash for clunkers. And you can see that the blue line for car registrations has held up and not collapsed quite as rapidly as the GDP red line. But if you look at the situation on commercial vehicles where they haven't provided support, the commercial vehicle registrations go down just as rapidly as the GDP. So that leaves us with the issue of what happens when those schemes are taken away, as has already happened, for the support for the car industry. What does this mean for fasteners? Well, these are broad estimates across Europe. OEM deliveries down 30%, MRO down 15%, trade retail, probably 5's understating it, 5 to 10. I think these are modest. Maybe if you could really see the numbers behind them, they're probably a little bit worse than that from a volume point of view. Unfortunately for us, OEM is about 65% of the overall demand. So the big headline numbers nearer 30 than 5. We do quarterly surveys of our members on a national basis, and we ask them for trend indications of the last quarter, the current quarter, the next quarter, on sales, profit, margins, stock delivery times, and so on. And broadly, business fell heavily, very heavily at the end of 2008. Again, October, November, 30-40% decline. Just about leveling out at the end of 2009, and a slight improvement in the first quarter this year. And what do we expect for 2010? Broadly, slightly better demand, but difficult trading conditions. It's going to be tough. One issue has become increasingly important in Europe and in the Americas, I think, fair trade and anti-dumping. Where does EFTA stand on those issues? Well, we support fair trade and we support free trade. And really, we are against dumping. We have importers, heavy interests in importers. My own company is more at the importer side than the distributor side, so I declare an interest there. But we're not looking for subsidized or dumped imports. It doesn't produce stable, long-term market situations. And I would have to say that as far as EFTA is concerned, we are against dumping and subsidy. And if proper corrections to those markets to create a level playing field are needed, we would support those. But we are also a supporter of free trade into access to global markets. And some of the things behind the anti-dumping claims are a little bit more than just leveling the playing field. I think they're trying to tilt it the other way. Fair duties are okay, but I have to say the European anti-dumping process does not always produce fair duties. It's easy to see why producers are concerned. I have spent an awful lot of my personal life on the manufacturing side, not in distribution, and I have a lot of sympathy with the issues that they face. Those are some statistics from the stainless and the carbon anti-dumping actions in Europe, and the bottom one are some numbers I took out of the Nucor complaint. And as you can see, all imports on stainless in the EU, 27 countries from 2004 to 2008, going from 52 to 64%. On stainless imports from India and Malaysia in particular, going from 3 to 28%. It's not surprising that once they put dumping duties on stainless on Taiwan and China, they go somewhere else. And of course, they then follow that with similar actions. Carbon steel, again, you can see the impact of China. All imports going from 36 to 46% of European demand from 2004 to 2007. But China imports going from 16 to 28%. So, that's a significant move in the market. Interestingly, I didn't really understand that or realize that until I looked in the bloody Nucor document complaint and tried to look at the figures. But in contrast, what I see of the US situation is a much more stable situation. It's very high at around 75% of imports, I understand, but it's pretty stable. And Taiwan and China, I see are quoted as 52% by volume and 44% by value out of that document, but not actually a very rapidly changing situation. If action was needed, it was probably needed 20 years ago. Seems a bit of a stable door situation to me. If they were going to do something, they should have done it a long time ago. So let the market become dependent on 75% of imports and then try and close the door to them is not good for an economy. And I think we should expect low-cost economies to be more competitive for simple standard products. And this in itself is not evidence of dumping or unfair trade. So it's not surprising that, given those import trends, that demands for trade protection are increasing, and they surely are increasing. Europe, USA, Canada, China, Brazil, wherever you look. I don't know how many anti-dumping claims are pending in the Commission at the moment, Bernard? Hundreds? 170. Yeah, hundreds. I mean, the politicians say in the global collapse, we must make sure we don't become defensive and close doors to international trade, and they go back home and start locking the doors, I think. And I think the economic downturn, there's not much doubt that the economic downturn has increased the desperation to find protection and defend your home markets, which is perfectly understandable. So what happens, more to the point, what happens when actions are brought? I can only speak for my experience in Europe, and I was quite heavily involved in the carbon steel complaint. Is it fair? Absolutely not. The process is too political, it's too susceptible to manipulation, it's not transparent, and it's not open to challenge. In the case of AD 525, which was the carbon steel from imports from China complaint, the complainants themselves stated that they hoped for a duty correction of about 25 to 30%, which we had seen on imports of wire rod and various other things, and the main driver was subsidized steel. The main allegation was subsidized steel in China, and everybody had a pretty clear idea what that was. So if they'd been successful, they'd have got a 25% duty, and everybody would have been happy, and frankly, the distributors would not have been against that either. It would have increased our sales and margins, and, by and large, we'd have been happy. They actually got 87%, and even the producers have gone on record as saying they were staggered. Frankly, they don't understand where they've got it from. And where they've got it from is an archaic process that works and comes up with an answer, but it's not a fair answer. It's not a correct answer. It's just the only answer that the process can produce. Well, not the only answer. Certainly there's a bit of leaning in that direction, but where freedom of choice of decision is available to the Commission, they lean in that favour. Nobody believes that 87% duty is correct, but you can understand why the European Commission are quite keen to have a high duty. Would it surprise you to know who gets the bloody proceeds? 500 million of imports from China, 87% duty on 500 million. That's not bad, is it? Yeah, it'll buy a few more lunches in Brussels and pay for a bit of a salary increase. It's in the UK we have once the government allowed local authority police departments to take the proceeds of the fines from speed cameras suddenly were justified on return on capital, and by golly, they appeared on every corner. Let them have the proceeds. Why should it surprise you? I might be a bit cynical. Does it work? Yes and no. It does damage the accused exporters, and in that sense it works. But no, it doesn't generally help the domestic producers. The orders simply go elsewhere to other exporting countries and, frankly, stimulate additional competition to the domestic producers. There are loads of unintended consequences. The whole process is inefficient in the UK. In the EU, there are far too many borders which are policed rigidly in the UK and Germany. But once you get to the outer edges of the Eastern European Union, things are done differently. And I'm sure things like cheating, transshipment, changing documentation, we know these things are happening. And frankly, they are as damaging, if not more damaging, to distributors as they are to producers. We are as against that as anybody. And any established business cannot afford to trade in that area. It's a nightmare. But it's part of the consequences of introducing high levels of duties. If you can avoid an 87% duty, if you're prepared to sail a bit close to the wind, don't be surprised if lots of people try it. And broadly, I believe the aim is not, the aim in the complaints is not strictly to compensate for differences, to protect domestic production. It's really to defend your own interests by whatever means, and I understand that. That's what most people do in business. The problem is that we don't have the means to control it, so it just creates a chaotic situation. And this chart, which Bernd helped produce by spending lots of hours studying the Eurostat import data, shows who has gained and who has lost during the periods of duty protection from 2005 to 2009, and it shows which countries. You can't read those. You can see it on the slide if you've got your own copies. But broadly, the big red one on the left is China. Not surprisingly, 700 million of imports from China pretty much evaporated overnight when, at the beginning of last year, dumping duties were introduced. And you might think that, okay, China loses and all the European producers gain. But that's not the case. The other three red ones above China are Sweden, Italy, and France. All producers of mainstream bolting, all people who were hoping that the protection would defend them, but they are certainly, in the case of Italy, I think, much more rigid markets, rigid economies. They were not able to be flexible, and frankly, nobody went back to buy from them. The gainers, well, you see the US, but I think that's a special aerospace type. It's a special sector and not representative here. But Germany gained a lot. Germany is a very open trading market. The Germans weren't particularly behind the anti-dumping complaint. They said, we've got special niches, higher added value products. Frankly, we're not actually bothered by China and weren't particularly in favor of it and have carried on prospering anyway. You otherwise see some of the East European states and some of the other Asian suppliers. So it isn't simply that you introduce dumping measures and the guilty party suffers and the producers inherit the gains. It doesn't work like that. It just goes somewhere else down the road. So where do we go from here? Well, just try and leave you with a few questions and a few things to think about. Can distributors and producers work constructively together? I think they have to. I think we have to be mature enough to recognize our differences of view, our different positions, but be grown up and be sensible. And frankly, let's have fair trade, but let's have free trade. And I think we have to recognize that is the goal that we should all be working for. Distributors are the interface between the global production, the global supply side, and our customers. And those manufacturers of mechanical products and whatever want and need the best supply sources globally if they are going to remain globally competitive. And market forces will ultimately prevail. Distortions and protections are short-term distortions, which I don't believe will help. And pretty much the evidence we see is that protection does not make the domestic producers more fit to meet the global challenge. It just gives them a little bit more oxygen to survive in a difficult market. I propose to end my session there and just say thank you for your time and for your attention.
Thank you very much, Geoff. You certainly have led very well into the next panel discussion. Some of the issues that Europe has faced with the involvement of the government. And I think what we all learn from this as an industry in the United States, let's self-regulate before we get regulated. I think we all need to be thinking of these things as we move ahead as an industry. You also raised some interesting points, I thought, as well. The fact that you have two separate associations for the associates or manufacturers and the distributors. And I was sitting here thinking, boy, I'm glad we're all here together so that we can talk to each other at NFDA. And my hat's off to the previous members who looked at that and said, let's work together as an industry as opposed to two distinct groups. So I'm very pleased that NFDA has made that move.
Steven Fang of the TFTA coming up next on Fully Threaded.
This is Sue Rice with the FCH team. It's my job to make sure that as an FCH member, you receive the highest possible benefit from your participation in the network. Did you know that once you're logged into FCH, you have access to exclusive search tools, site statistics, and tracking information about your inventory and source finder inquiries? It's all just a click away, and I'm happy to walk you through it. If it's time to refresh your inventory, don't worry. We'll run your listings through our scrubber software and get you up and running in a very short time. If you can attach a spreadsheet to an email, you can list inventory on FCH. We can also show you how to optimize your listings to attract the most hits for your type of fastener. Send email to Sue at fastenersclearinghouse.com and let me help you get the most from the FCH sourcing network. I look forward to hearing from you soon.
Hi, this is Scott from Hunt's Hardware and Supply, fastener supplier for Northeast Wisconsin. You're listening to Fully Threaded Radio.
Good morning, everybody. So from this chart, you can see that this orange line in the last 5 years, it's moving up and up and up. Also, if you look at this, the blue lines in the bottom, the last 5 years, Taiwan fasteners production and export in tonnage is decreasing. So the price, unit price, this orange line is the average price in kilo, is increasing, but the weight is decreasing. So means Taiwan is going to another way of direction compared with 10 years ago. So this is totally different picture. Since 2005, China export more fasteners than Taiwan. So Taiwan, at that moment, think about what should be our next step, because Taiwan is more and more expensive in labor cost and in many things. And during that time, the world economy has changed. For instance, like this steel price has been went up crazy in 2008, and stainless steel price has been went up to many, many times that never been so expensive before. Even the ocean freight rates has been crazy increase to double because of this oil price. So many, many things change the whole picture. And if you look at this 2007 and 2008 of China, I just show you two figures. China also changing. The total capacity in China was 5.2 million tons in 2007. But they export about a little bit less than 4 million tons. But in 2008, the production nearly close to 6 million tons a year. But exports still nearly the same. So it means that China's domestic consumption is increasing significantly in the last 3 years. And Taiwanese government is trying very hard to push more and more fasteners in manufacturers to high-end product. So there is a cooperation between this MIRDC and China Steel Corporation. So they make a high-value fastener research alliance. So first step, they have 7 companies join this project. For instance, this Medcat, this is it's a plating company. They are mainly represent some brand-named coating material from United States. Those are 4 General Motors approved coatings. So this is the average price analysis in the last 5 years. You could see at the beginning, the distance between China and Taiwan is a little bit less. But now this gap is become bigger and bigger. And the steel price is impact our fasteners price very much. And what could be the next? Because this World Steel Association chairman, he says estimate this year, because our economic is coming back, is getting better, so the consumption will increase about 10.2%. This is the world steel consumption. But China, even last year, when everybody was in very, very difficult time, their consumption increased 25%. So we think that steel price will keep moving up. And in this morning, another chart shows from Tammy. If you look at 10 years ago, steel price has big difference between Europe and Asia. But now, Europe, United States, and Asia's steel price are getting closer and closer. So this basic difference is no more existing. If it's $1 billion in China, that's nearly also about $1 billion price in United States. This is today's picture. And somebody has some questions about China Steel Corporation. Maybe they do special efforts to support Taiwanese fastener industry. But in fact, China Steel Corporation, they say China Steel Corporation, but this is a steel mill in Taiwan, not in China. It goes public since 1974, but in 1995 it became this state-owned enterprise to a private company, and it is a very profitable company in Taiwan. It's a very successful steel mill. So China Steel, they have several different incentive programs for their customers, but there's no any type of such subsidies to Taiwanese fastener industry. So somebody just asked a question if some countries, they will transit their fasteners through different countries. This is a case recently reported in March 15th in Malaysia. They claim the Chinese fasteners try to transit in Malaysia to Europe. So it shows that in 2008, the delivery from Malaysia was 55,000 tons, but 2009, when every countries are decreasing, but they are increased up to nearly double, to 99,000 tons. And then this European OLFF, they start investigation. And then in the Fastener and Fixture magazine, we see that they already prove this is wrong. They got evidence. But I don't know if they are going to take action or not, because everybody is now busy for the new for the new prosperity economics. So now let's come back to this picture about China export. In 2009, the number 5 country is Malaysia, but in 2008, Malaysia even not in the top 20 list. So we don't find that in this Malaysia. But if you look at this data, it's 40,000 tons. So the difference is 44,000 tons of 1 year. But if you look at the previous slides, you see that this is match. Just miracle. If you look at here's another strange figure. Have you ever heard about in the desert or in Middle East, UAE? It's United Arab Emirates. They produce fasteners at very, very competitive price. It's the 3rd largest export country of China. So now let's talk about if this European anti-dumping duty has affected Taiwan. If you look at this chart of the last year and until this year, January and February, Taiwan's export is increasing dramatically. And last year, second quarter was really, really down. Everybody was suffered with minus 50-60% of business. But then third quarter went up. Last fourth quarter getting better. And then this year, first trimester is getting better and better. I believe most of your companies became profitable and smiling. I don't know if some of you still remember this chart. That 3 years ago, I was being invited by Joe Roseman. I appreciate that, to give me a short time to introduce about the global steel industrial presence and tendency. And I show this chart. Also, I show another chart about China. Many things shows on this paper. Many these railways, speed trains, water pipe, gas pipe, heavy industries is moving, start in China. I don't know if you are familiar with the inland city called Wuhan. Is anybody has been to Wuhan? It's good. Wuhan is a city is about 1,000 kilometers away from ocean, from Shanghai. So this is the inland city. There's a news that last month there's a new building finished, looks like this. Modern and huge. What is it? What is it? This is a train station of an inland city. Amazing, huh? In Shanghai, maybe many people will go to see the warfare, and you will have chance to see the new maglev with 500 kilometer per hour speed. Fortunately, I was there on March 2nd, so that was last month. I was on a little bit old train, and I just see the meters. It's running, move up to 416. I was a little bit scared, and then I was looking for seat belt. There's no seat belt. Why? If anything wrong, seat belt could be the first thing to kill your body because it's too fast and such a high speed. Some new experience, we never know. You have to experience by yourself. So next time when you travel to Shanghai, don't ask somebody to pick up you. Take a train, take a subway, experience by yourself. China is a fast-growing market. Recently, they have 7,000 manufacturers, about 3,000 traders. This, according to Freethonia, estimate that in 2013, Chinese fashion consumption could reach about 11 billion. Today is totally about 7 billion. It could be reach 11 billion. If you think about Chinese export, totally it's about a little bit more than 2 billion today. 3 years later, there could be shortage of fasteners. Could be. So what you talk about, what you worry about anti-dumping duty, I tell you, they will grow more in China. They will use more fasteners. This is a huge market. In 2009, Chinese State Council has approved 22 cities want to build subway. Currently, they have 1,000 something kilometers railways under construction in 15 cities. Until 2015, they have another several thousand kilometers railway supposed to be built. China is planning to invest 4 trillion yen, focus on railways, highways, airports, lots of things. So, what you think about export to China? Think about it. In the past 5 years, renminbi has been appreciated about 20%. Yesterday I discussed with Brian after his very, very nice speech about his personal opinion about RMB. He said the change is about 3%, not very big steps, not very big change. So in the near future, we could expect about 3% change. But let's talk about these two countries, China and Taiwan. Now the possession is about nearly 55% accumulated together. The third will be Japan, but look at the Japan's unit price. It's $6 per kilo. Are you able to buy from Japan? I would believe mostly in very high accurate fasteners, not the cheap fasteners. If you compare with 2008, these two countries still the major supply partner to United States. It's about 56% of this import percentage. So if you don't buy from Taiwan and China, who could be your alternative? Think about this question. I think China is a very fast-growing domestic consumption area. It's moving fast. So in the near future, 2-3 years, maybe this export picture will change. And this strong renminbi will affect this fashion export. But it could make them easier to import. Think about this. And Taiwan is definitely moving to a special category. We work for this high quality and value-added service for customer satisfaction. So we need We welcome everybody to visit Taiwan and to visit your suppliers, to give them instruction what you want. And just don't talk about your next door is 5% cheaper than you. You should work a little bit harder. That well gone. Thank you.
It's fully threaded. We'll be right back.
FastenersClearinghouse.com. Search and source from over 500,000 line items, all just a mouse click away and available at no charge. When the need arises, you won't find a better place to locate hard-to-find fastener inventory. It's where you need to be.
This is Joe Truckee of Cal Fasteners, and Fasteners Clearinghouse works for us.
This is Robert Wanzer, and Fasteners Clearinghouse works for American Imperial.
This is Andy Pell from ScrewCrew.com, and FCH works for the fastener industry.
Join the sourcing network now and show your inventory to a whole new market. Turn slow movers into cash. List up to 10,000 line items. Show them to distributors only or to the world. FastenersClearinghouse.com. It's where you need to be.
I'm Matt Traylor with Madison Fasteners, and you're listening to Fully Threaded Radio.
Brian and Eric back with you.
Right.
I was thinking about that fast train that's being developed Steven was talking about. If it maxes out at 416 kilometers per hour, that comes out to 268 miles per hour. You know, I used to take the train to my job right out of college, and occasionally I'd see guys who fell asleep on the train on the way home after work, and I always had this fear of falling asleep because you wake up, you're way down the line, you're at the end of the line, you wake up, you missed your stop. On a train going that fast, you could be 1,200 miles away.
Right. Yeah, that's true. Now, you know that the grandfather of these really fast trains is a French one. It's called a TGV, the Train Grand Vitesse, and it's been running for a few years. The maximum speed of that is 200 miles an hour, and the railway line is set down in the ground so that the noise from it doesn't disturb people living nearby, and it goes between Paris and Lyon. And the Germans have just built one called the IC that goes between Frankfurt and Cologne, and that travels at 220 miles an hour. Now, I've been on that one, but this Chinese one is faster than all of them, and it's a great feat that they've built these trains.
Well, the TFTA is estimating that the requirement for fasteners is going to go sky high, and we'll all be watching to see what that demand actually turns out to be. I wanted to point out also that at the conclusion of Geoff Hopwood's comments, that was Wendy Rose, the outgoing president of the NFDA, who was making a few comments, and she was handing off at the Spring Conference meeting to the incoming president, Jim Deary. And we'll have Jim Deary with us next episode, and he'll be discussing the NFDA's new direction, and I'm very much looking forward to that.
Yep, that'll be really, really interesting.
I'd like to remind everybody that Fully Threaded Radio is now available from iTunes. You can download the broadcast or the podcast to your iPhone or iPod and listen to it in the car, in traffic, or on your way to sales calls. Also, email us at ftr@fullythreaded.com.
Right, and we'd like to hear what your views are, and if you think we can improve it or any suggestions, we're always open for those.
So getting back to the fast trains then, I guess that sets up potentially a very interesting algebra problem for us.
Right.
If a fast train going from Shanghai to Beijing is traveling at 268 miles per hour, and a similar train, fully loaded with passengers, is going from Paris to Lyon, if you wanted to create a similar train to go from Washington, D.C. to Los Angeles to hit the average speed of the first two trains, how fast would that train need to go?
Well, I think we need to leave that as an answer that you have to wait for in the next episode of Fully Threaded.
Good answer. And with that, we'll put this one in the books. For Brian Musker, this is Eric Dudas. Talk to you next time.